Hi everybody. Okay, I've loaded up VectorVest 7 UK. So if you double click on your VectorVest icon, if you've got UK as your second country, you can put in your username and password and you'd log in just like you would when logging into Australia. Chances are you've got, of course, Australia and America as your second country, but you can always change America should you choose to the UK. If you want to acquire the UK as a third country, for example, it would be an additional $199 US a year. So you can see here in the UK, just like Australia, similar amount of stocks, just over 2,000 stocks in the UK database. All right, so I'll cancel out of here because I've already logged in. And I'm going to move over here to viewers. I'm in stock viewer here, and I'm going to look up Thomas Cook. All right, so Thomas, I'll type in Thomas. VectorVest will now bring back all the stocks with the name Thomas in it. There it is, Thomas Cook. Ticker code Tcg.L. It's on London Stock Exchange. There we are. I'll select it, and there it is. So you can see it's currently a sell-rated share. It's just announced it's gone bankrupt. So no surprises there, but look at that VST 0.74, RS 0.66, very low RS, RT very low and anemic there at 0.18. Look at that negative earnings growth rate. It's all very well looking at it now, but what did VectorVest tell us about this weeks ago? And this is the power of VectorVest. VectorVest told you weeks ago to be very careful about the stock. So I'm going to load up the graph here, and the graph layout on the double drop down here, I want you to select VectorVest layout for those of you that want to take a look at this in the UK market. Right, so I'm going to select the VectorVest layout, and then I'll minimize this out here, and I'm going to pull it back just about a year or two back. So let's go back just on 2 years. What I'm wanting to do here is I'm wanting to show you where it turned from being buy and hold rated into sell or hold rated. If I pull it back just a little bit further just to show you, and I'll change this here to being a date line. So you can see a very nice run up over here, and then all of a sudden things started to turn around to the downside. So you can see over here, if I zoom in over this time period here, notice here, we start to get a lot of volatility in the price. So this is where I want to show you Dr. DeLito's 4 steps to protecting profits. All right, so you can see over here, price was falling, and we got plenty of volatility. It went from a high price there of 150, and look at that, within a space of a few days, it had fallen all the way down here in terms of the price to 122. So it dropped well over $25+ during that time period. So you can see over here, it had fallen away quite rapidly. So there's step 1 being met. Step 2, price through the 40-day moving average. It occurred just on around about here. So we can show you exactly when it occurred. So look at that, 124 on the 40-day versus 122. So price just gone below. And if I pull it back just a day or two prior, so you can see over here 125. The 40-day simple moving average is 124. So you can see it occurred exactly there. Right, so it occurred on the 22nd of May. So you've got direction moving against you, you've got volatility. So that's step 1. Step 2, the 40-day moving average is breached. Step 3, relative timing goes below 1. You can actually see over here the day prior, relative timing had gone below 1 on the 21st of May. But you can see over here, step 1, step 2, and step 3 were all met on the 22nd of May. And then for step 4, the final step here, look at that, 29th of May, rec equals sell. You've got all 4 steps. You've achieved all 4 steps. Why are you still holding on to that stock? All right, so you've got step 1, price is falling away, and there's volatility. Step 2, the 40-day moving average is breached. Step 3, relative timing breaks below 1. Step 4, rec equals sell. Now, if I expand this out, look at that over there. Price never recovered. Okay, so if you were going to look to buy back in, you certainly wouldn't have looked to have bought in on a rec equals sell. So you can see from the 29th of May, there were very, very few days where the rating was not sell rated. Next question I've got to ask is, if you were looking to buy back in, we favor shares with a smooth left to right price pattern where the earnings are rising, and you can see over here that certainly was not taking place. Okay, so the 4 steps to protecting profit, Dr. DeLito's 4 steps to protecting profits protected you very nicely. Now, the reason I bring this up is because the methodology that we teach, of course, in the UK, for example, with Thomas Cook, same methodology. Let's bring over another share here, applies in Australia. So let's do this. I'm going to change the layout again. So just like we did for the UK, we'll change the layout here to the VectorVest layouts. There it is. All right, so the VectorVest layout here. And if I pull this back a little bit in time over here, so a good run up in the share price, and then all of a sudden you start getting the volatility and the price moving away, and you achieve all 4 steps that take place on the 16th of May, for example, on Bellamy's. So you can see over here, the momentum was falling away in volatility. Right, so step 1, step 2, price through the 40-day moving average. Step 3, relative timing. So let's just double check this over here. Relative timing, there we are. Relative timing went below 1. Why would you be holding on to the stock thereafter? Okay, in terms of looking to get back in, you want to make sure that you're starting to get a nice smooth left to right price pattern taking place. Certainly not taking place there. It's quite volatile still. And you want to make sure that you've also got a nice set of rising earnings. You can see over here, for example, you can see the earnings are continuing to fall away. So the 4 steps took you right out over here at $17 odd. You're not looking to get in just yet. The price is still down a fair bit at $12 odd. All right, so you can see over there, the 4 steps really help protect you. Okay, so let's just pull this to one side. Let's go back here to Thomas Cook. VectorVest gave you plenty of signals before we finally got the sad news in the press coming out about what had happened to Thomas Cook. If you were holding on to Thomas Cook much after the 29th of May, the question I'd have to ask is why? All 4 of these steps were taking place. If you were applying a risk and money management set of rules per your back testing, chances are you would have been stopped out. Why would you have still be holding on to Thomas Cook? All right, so with the power of VectorVest, we give you the tools so you don't have to hold on to shares and lose money. We give you the tools so you buy rising shares in rising markets and you protect falling shares in falling markets. If you're applying a risk and money management set of rules per your back testing that you're happy with, then stick with those rules. They work well, you've tested them, you're happy with them, stick with them. But if you're not applying a stop loss and you're considering a stop loss, why not take a close look at the 4 steps to protecting profits? So Dr. DeLito's 4 steps to protecting profits. It works very, very well. I've had a lot of great success using the 4 steps to protecting profits. Dr. DeLito's 4 steps to protecting profits. All right, have a great weekend. Stay tuned. Next week, I'm going to have a look at some of the Australian shares. So we're going to look at the Australian shares in the flights and holiday business. So shares like Qantas and Flight Centre, for example. Let's see how our shares are stacking up in the holiday and flight sector. Stay tuned. We'll cover that next week. Bye for now.